Joining us today is Citi's global chief economist, Nathan Sheets. Nathan, it's such a pleasure to have you. Thank you for the time. I guess first things first, in the near term, how much of the resilience you're seeing globally is in fact about China?
Well, the Chinese economy is expanding at a very rapid clip. The Chinese consumer has simply roared out of the lockdowns. And first quarter GDP, we're expecting it to be strong, but it surprises on the upside. And we marked up our growth expectation for China for this year to over 6%. And given that it's the consumer and it's particularly focused on services expenditure, the spillover to the rest of the world is not as great as if we're investment in infrastructure like past Chinese recoveries. But nevertheless, having the Chinese economy grow at 6% plus is a positive development for countries exporting to China. It's a positive development for sentiment in global financial markets, and a very helpful, constructive backdrop for growth in the rest of the world.
But doesn't all of this just mean, Nathan, that the Fed is going to keep raising rates and keep them higher for longer, which increases the chance of recession?
Sarah, it sounds like that you read our outlook, which is precisely kind of what we're arguing, that we see a little bit, yes, the economy's slowing, but we see a little bit more durability in the economy, in the labor market, and inflation. And as a result of that, we have the Fed hiking rates to around 5.5%. So we're a little bit higher than the Fed's dots, and we see that as what will ultimately be necessary to bring down inflation. And that is kind of the dynamic that unfortunately also brings on a recession toward the end of this year and into early next year.
I don't know that. Have you mentioned the lending squeeze that everybody's worried about, the result of some of the bank failures and the impact on small business, commercial real estate, the broader economy? Isn't that sort of a wild card?
That absolutely is a very significant wild card and a downside risk that we are very, very focused on. Now, I do think that the good news in that respect is we've moved from what I've called the acute phase of these stresses, where it's about bank runs and uncertainties about institutions failing, into more of a chronic phase, where banks are thinking about their balance sheets and asking themselves, well, can we continue to extend credit in the same way as we have over the last several years? And as a result of that process, we believe that there could be a credit crunch in the economy. And that's something that will unfold in coming months and quarters and could indeed make that recession that we're expecting somewhat longer than it would be otherwise and somewhat deeper.